Hi there, this is Kevin Turner from Spanish River High School in Boca Raton, Florida, back with you for another episode of AP Daily. Today we're talking about topic 7.6, trade and the world economy. So what are we going to learn in this video? The word interdependence is a big part of understanding this idea of a globalized economy. It took Christopher Columbus 3 months to cross the Atlantic Ocean. You and I could get on a plane and we could be in Europe for breakfast tomorrow morning. So when we think about the global economy, so much of the world is becoming interconnected, interdependent, even, meaning that I need you and you need me. We're all kind of in this together in the sense of a global economy. And so when we think about a global economic setup, we're talking about the idea of complementarity. And that is the idea that if you have something that I want and I have something that you want, it's better if we were to trade with each other. The idea that the value increases because you want what I have and I want what you have. Now, of course, there has to be not only demand, there has to be effective demand. I mean, I could want a Lamborghini all I want, but I don't have effective demand for a Lamborghini because I can't exactly go out and afford it. But when we think about complementarity, so much of the global economy today is a country that's really good at one thing is able to trade with another country who's really good at another thing. So this is where we start to see the idea of comparative advantage, right? I mean, Florida is really great at growing citrus. Georgia's famous for things like peanuts, right? California has a lot of high-tech companies, right? Michigan was able to build a lot of cars. New York City's got a lot of financial banking firms. So we start to specialize at things, just like countries are good at certain things. Okay. Some countries are very agricultural. Some countries are very industrial. Some countries specialize in service type jobs. So the idea here, the theory is that because of a global system of trade, everybody can specialize at what they're really good at. And therefore, they'll be able to trade, right, in this setup of a global economy. So technological innovations in transportation and communication are making the world a lot smaller than we think it is. It's kind of like that ride. It really is a small world after all. So we know that consumers today, they're not just limited to buy things locally. They can buy things from, the store around the corner, but they can also buy from a different part of their own country, or they can buy from countries in far-flung regions of the world. So we have a wider range of opportunities, a wider range of products, a wider range of services. And so that means that our effective demand is a lot higher than it ever was in the past. However, when we have all these complicated trade relationships, there can sometimes be hard feelings. It's no different than when you were little and you were playing with your friends, and your friend had a toy that you liked better than what you had. Maybe they don't want to share, or maybe you feel like it's unfair, or maybe they've got more toys than you. So what can happen, of course, is what we see sometimes in the news, in the current events. Let's look at an example. We've heard about this concept of a trade war with China, and that there's this imbalance that we buy more Chinese products than the Chinese buy from us, right? And we have tariffs, and we're going to tax them and put higher prices on their products so that we can encourage people to buy more American products. This is only one example, right? This plays out across countries and across regions of the world, not only on a daily basis, but on an annualized basis and over decades of time. Right. So, this is something that you really need to consider when you talk about both the advantages and the disadvantages, because sometimes on our FRQ questions, you might be asked to describe some of these trade relationships or to explain how they can change, or how one country might benefit more than another. Okay. Especially think about that verb compare, right? Because you're obviously, whenever you have two things, you have to be able to talk about both the similarities and the differences. Okay. So let's practice. We're going to actually do a multiple choice, free response, forgive me, free response question on this one. And this is one that was at more of a localized scale, obviously below the national scale. And it was talking about Silicon Valley in California, which most people are pretty familiar with the idea that there's a lot of high-tech companies out there that are based, especially in the Bay Area around San Francisco, but out towards San Jose, Sacramento. There's a very famous place there called Cupertino. You might know a company that makes a cell phone that is, named after a fruit, and they're based out there. You've also got the Research Triangle in North Carolina. There's a Texas Triangle nowadays. The area around Atlanta is huge. Boston is a great high-tech center. So they gave you these two options, and they said, discuss the following three factors that contributed to the rise of these high-tech industrial areas. And so they talked about investment capital. You need startup money, right? If you're going to go into business, somebody's got to write the bills. All right. Somebody's got to write the checks that are going to pay the bills. And sometimes that's, money you get from loans. Sometimes that's money that you get from investors. If you decide to go public and you put your company out there on one of the stock exchanges. But the idea is that these areas are well known for being a high-tech center. So investors, if you have a firm that's going to operate there, it's almost like you've got instant street credibility. Oh, you're in Silicon Valley? Okay, I'll invest a couple of $100,000 in your little venture, right? So you need that investment capital. You need that startup money. Labor, okay? Again, the workers in these parts of the country have a lot of experience in high-tech firms. Most of them have degrees in computer science, engineering, math, all kinds of STEM type courses that you guys might be taking at your high school, right? And here's what's really cool about these places. All of the ones that I mentioned, whether it was California, whether it was North Carolina, Georgia, Massachusetts, Texas, you know what kinds of universities are all around these little agglomerations, right? You might have learned that word already. Agglomeration is clustering. And so who's your best kind of an employee? How about the young person that just got out of school, has the latest knowledge, the latest expertise, and oh, by the way, is going to get paid less than the person who's worked for the company for a long time. So you got these young, smart go-getters, right? These young men and women, maybe they're even interns. That's the best kind of employee of all, especially if you don't have to pay them. Nowadays, of course, a lot of these internships, they're going to actually get paid for the work that they're doing, but there's still going to be a great labor pool there in these research areas, these agglomerations of high-tech centers. And then let's talk about the role of government. Right? The government can, and by the way, we're not talking the federal government or even state government. Sometimes it's local government. Sometimes it's cities, counties, municipal level. Don't forget, we have to operate at scale throughout our human geography course. The government might give them a break on the land. They might say, hey, for the first 20 years, you don't have to pay state tax. Anything to incentivize, anything to lure these companies to your area. Governments are often going to want to do. Why? Because they know it's going to create jobs. And when you create jobs, people tend to vote for you, right? So the politicians know, hey, if we can lure these companies into our backyard, this is going to be good for the economy, but it's also going to be good for us, right, when we're running for re-election. Okay, so all of those things we just talked about are things at scale, and they're all about complementarity and comparative advantages, right? The Research Triangle of North Carolina and Silicon Valley in California have comparative advantages over other parts of the country. So how does this interdependency work at those various scales, right? Because this is really what we've talked about this entire, video. Economic and social development are happening all over the world. They're happening at different times and at different rates, not just country versus country, but even within countries, right? Development is not happening simultaneously. Not everybody is getting ahead at the exact same rate. So we know that on the positive side, there's variation, but there can also be variation in terms of, say, a global financial crisis, right? Whether that's a physical geography thing like an earthquake or tsunami, if that's a social thing, if it's a banking crisis, if it's an outbreak of epidemic disease, right? This is where you start to see the effects can be regional, meaning it might affect all of South Asia. It might affect all of Western Europe, right? It could be national. It could affect, the United States, or it could affect South Korea. It could, put a dent in their GDP for the year, gross domestic product. It could be subnational. It could be much more localized, affecting just a few states in the southeastern United States, or it might be affecting a few counties, say, in South Florida. So when we start to see that, all of these scale effects are there, That's where, remember, skill 5 in our course and exam description, and maybe you talk about this with your teacher in your classroom. You have to be able to marry these topics and these skills together, right, to be successful on the AP exam. And that's what this AP Daily program is all about. We're trying to help you become better prepared to get that great score. All right, thank you for watching. Hi there, I'm Kevin Turner from Spanish River High School in Boca Raton, Florida, and I'm back with you for another episode of AP Daily, this time topic 7.6, talking about trade and the world economy. So what are we going to learn in this particular AP Daily video? So this topic is all about the concept of neoliberalism. And you may know that neo means new, but in this case, we're not talking about liberal like liberal or conservative politics. Neoliberalism is the idea of preferring free market economies and privatization over state planned or government control of economies. The vast majority of the global economy today are open capitalist free market economies. Now, obviously, there's greater or lesser degrees of freedom within those economies, and there are still some state planned economies that are a little more hardline, kind of communist dictatorships. But in general, when we say neoliberalism, we're looking for things like low barriers to trade, lowering tariffs, very low taxes, because what this does is that it encourages, it stimulates trade because it's cheaper and easier for things to be traded from one place to another. Now, in recent decades, it became very vogue to create some supranational organizations. Now, you should remember this back in Unit 4, where you talk about countries that work together. And so we're looking at things with the goal of free trade. Now, one of the early ones was the North American Free Trade Agreement. That has been kind of reimagined as the United States-Mexico-Canada Agreement. It's essentially the same kind of a deal. It fosters, right, more trade across the borders between the United States, between Canada, and between Mexico, right, by reducing or eliminating taxes and tariffs on those kinds of products. Now, the EU is another widely known example, and this actually started as early as the 1950s in previous incarnations, first with the Benelux Three, Belgium, Netherlands, Luxembourg, growing into a European Economic Community, and finally going through the EC, the European Community, into the EU, the European Union. So basically, like NAFTA, the EU started out as this free trade zone. Now, the EU went farther. NAFTA never imagined open borders like the Schengen Agreement. NAFTA never imagined a common currency like the euro. So the EU definitely has taken this farther along. But I just want to show you that many regions of the world have some kind of FTA. And when I say free trade agreement, you could be talking about the Association of Southeast Asian Nations. You could be talking about, just any other part of the world. There was a proposed Trans-Pacific Partnership. This is kind of what we mean, where regions of the world, the countries within them will get together to foster better access and better trade. So when we think about fostering globalization, all right, let's see if we can look at some examples of these big groupings and associations. Now, your course and exam description talks about several specific types of supranational organizations that have free trade as their goal or have some sort of economic underpinning to the members of the group. I mentioned the EU just a second ago, the European Union. So with our great animation here on our map, we've shaded in the members of the European Union. Remember current events, we have a recent change with one of the members of the EU deciding that they're going to exit, right, from the membership, all right? And so take a look at the map, talk with your teacher, see if you guys can talk about which country that is that's deciding no longer to be part of that group. We talk about Mercosur, right? And sur in Spanish is in the South, and this is like a Southern market, right? So this is a free trade zone within some of the countries of South America, primarily Brazil, Argentina, two of the bigger economies that are there. There's also a group known as OPEC, the Organization of Petroleum Exporting Countries. Now, this one's a little bit different in the sense that it functions as a cartel. where they try to take a raw material, in this case, oil, and they restrict or control the supply and demand for that product so that they can try and garner a price that's preferable for them as the supplier of the resource. Now, a lot of times Americans tend to think that OPEC is just kind of a group of Middle Eastern countries because we think of that being where oil is located. But I will tell you that look carefully at your map here, you're going to see that Venezuela is, and not only are they a member, they're a founding member of the OPEC group. You have Nigeria there in Africa is a big member of OPEC because these countries also have tremendous deposits of oil. So they belong to this organization of petroleum exporting countries. Right. Finally, another group that bears mentioning is the World Trade Organization, often just, colloquially known as the WTO. World Trade Organization has as its goal fostering globalization and free trade. The WTO will work to build relationships, not just between countries, but between regions of the world. And again, their goal is that by creating more trade, that this will generate more incomes, it'll provide more jobs, it will lift people out of poverty, it will help countries on their path towards development. Okay, so let's practice taking a look at a couple of questions. So when we talk about free trade zones, right, remember NAFTA is the precursor to what we now call that United States-Mexico-Canada agreement. And this is, what are these groups established to do? To increase the ease and the volume of international trade, right? And if you look at this, in what way are they able to do that? Right? So we have all of our choices here. We've got diplomatic relations, we've got migrating guest workers, we've got common monetary unit, we've got larger economic development loans, and then we've got eliminating tariffs, okay? So we might know the right answer. Let me hold off on that. Let me look with you at some of those distractor answers. Remember that the EU did establish ease of migration of workers, right? The Schengen Agreement. So if you look at B, that's an EU answer. That's not a NAFTA answer. If you look at C, establishing a common monetary unit, that's that euro that I talked about with the EU. So again, those distractors are really good because they're true statements, but they don't apply to NAFTA, right? And so what we're going to see is those distractors is that when you get ready to become a better test taker, you need to see that those answers they're there because they're good, but they don't answer the question that's being asked. So your best answer is eliminating tariffs on goods that cross over the border. That's what NAFTA did. That's what the USMCA does as well. It lowers the cost of the goods by removing the taxes and the tariffs every time you cross a border. Okay. Another practice question: which of the following has fostered the most significant economic growth by eliminating import tariffs between member states? Okay, so now we have a lot of alphabet soup here. That's what I like to call this, alphabet soup. Got all these acronyms of all these groups. And we've got the UN, we've got the Association of Caribbean States, we've got North Atlantic Treaty Organization, we call that NATO. I talked about OPEC in this video. NATO is a military alliance, right? It's the United States, Canada, and their Western European allies. Originally, it was envisioned to defend against a potential Soviet military attack. NATO has kind of reinvented itself in the modern world as kind of an anti-terrorism alliance of countries that, try to keep each other safe and secure. So if you look at all these other ones, OPEC is about an oil cartel. It's not a free trade. It's not eliminating tariffs. NATO is military defense. It's not even economic. The others, the UN has way bigger jobs than just trade. The UN is working for child education, for female empowerment. They're working for refugees and helping them through their issues. They're working on the environment. The UN is a really big organization. The best answer here, of course, is the EU. Right? That is ultimately their first goal, was to promote trade, right? To remove the restrictions and to remove the costs associated with trading goods back and forth across the borders of the European countries, right? That belong to the EU. So what should we take away from this particular video? Remember, I always talk to you guys about the skills and the topics both, right? So in this topic, talking about, the content, we need to remember that the scale is a big thing here, because skill 5B that is in the CED married to this topic talks about explaining spatial relationships across various geographic scales. And remember, we can look at things globally, we can look at things regionally, we can look at things nationally, we can look at things locally, right? So that's what we call that scale of analysis. Your local government, right? I mean, they may be out there fixing potholes. We don't expect the US Congress to come to your neighborhood and fix the street, right? At the same time, we wouldn't want your mayor or your city council to have to deal with like trade policies with China. That's kind of a bigger job than what they've signed up for, right? So local governments, they're dealing with things that are in your area, right? That's the scale of that. Whereas the national government might be talking about something bigger, like an export processing zone or a free trade area in a port city, so that things can come into and out of the country with less restrictions. Okay. Coming up in topic 7.7, Ms. Cosgrove is going to be talking to you about that idea, right? About the export processing zones and the jobs that those can sometimes bring into a country, because that's going to increase their development, but it's also going to increase the economic interdependence, right? Where countries depend on each other because of that complementarity and comparative advantage, and it builds those relationships. Until next time, thanks for watching AP Daily.